Okay, welcome everyone to the income tax seminar for postdocs. We're very happy to have Bob here to present information on how to file your income taxes in Canada. Here at GSPA, we received a few questions on that we were not able to answer, so we're very happy to have Bob here providing some information. So if I haven't met you yet, my name is Sarah Howard. I work in graduate studies and postdoctoral affairs as the manager of postdoctoral affairs and programming development. So thank you so much for joining us today. Just a few quick notes. We are recording this session because Bob will also be offering some one-on-one consultations, and we want to make sure people attending that either have attended this seminar or watched the recording first. So it is being recorded. So while Bob is doing his presentation, I would ask that you just keep yourself muted and your cameras off so you're not included in the recording. And then you're welcome to turn your camera and microphones on for the Q&A session at the end of the presentation. I will probably just leave the recording going, but we won't include your video and questions in the recording that we post online. A few other notes. I will be here to support in the background. So if you have any technical questions, anything with Zoom that's not working for you, please feel free to send me a message through the chat. As well, when it is time for the Q&A, if you're not comfortable turning your camera and microphone on, or you don't have that capability, you can send a message through the chat or the Q&A. I will monitor those and I can flag them for Bob as needed. And then the last thing, just before I pass this over to Bob, I just want to provide a territorial acknowledgement before we get going. Here at the University of Waterloo, we acknowledge that much of our work takes place on the traditional territory of the Neutral, Anishinaabe, and Haudenosaunee peoples, and our main campus is situated on the Haldimand Tract, land granted to the Six Nations that includes 6 miles on either side of the Grand River. Our active work towards reconciliation takes place across our campuses through research, learning, teaching, and community building, and is coordinated within the Office of Indigenous Relations. And I would encourage you, if you're interested, to visit that office's website to learn more about what work the university is doing. Okay, Bob, I will hand it over to you then to your presentation.
Okay, thanks very much, Sarah. Well, good morning, everyone, and welcome. As Sarah mentioned, my name is Bob Sproul. I am a retired faculty member from the School of Accounting and Finance at the University of Waterloo, and still manage to hang around the university doing some things for a couple of groups. What's going to happen this morning is we're going to spend a little less than an hour talking about income taxes in Canada. And the approach with regards to the material I'm presenting to you is predicated on a perspective that you are a postdoctoral student who started your work at the University of Waterloo sometime in 2022, and that this is the first time you're faced with the daunting task of having to file a tax return in Canada. And I say daunting in jest, but also in reality, I guess in the context of reality, because the reality that exists in Canada is Canada, like a number of other developed countries, likes to make things complicated. And unfortunately, one of the ways that they complicate things is with regards to personal income taxes. Unlike a number of other countries that either have employers or government agencies take care of income taxes, and the employee has basically nothing to do. Or there are things like flat taxes where a simple 1% tax amount is used to apply to whatever an individual's taxable income exists. Neither of those scenarios exist in Canada. So the onus with regards to filing tax returns is on the individual. And the other thing that exists in Canada is a complicated system predicated on a perspective that they're trying to be quote unquote equitable. Equitable amongst people with varying levels of taxable income. And so they have what's called a marginal tax system. that basically starts with a relatively lower tax rate. And that tax rate increases as your taxable income achieves certain thresholds. The idea being, hopefully, the rich will contribute more relatively than the poorer to the programs that are funded by taxes that are collected in Canada. So let me start by suggesting that, are you eligible to file an income tax return in Canada? And the answer is yes. And the conditions that exist that create this eligibility is that you did settle sometime in Canada during 2022. So it could have been in sometime in the spring, in the summer, or the fall of 2022. You have what are called residential ties. And residential ties do not take much on your part in order for them to be established. As I suggest in this bullet, even setting up a credit card in a bank, the Canadian bank that you do your banking with, is enough to qualify you as having residential ties, and therefore being in a position where you can file a Canadian income tax return. In order to file an income tax return, you do need a social insurance number. That's a 9-digit number that is issued by Canada Revenue Agency, which is the federal government agency that is responsible for personal income taxes in Canada. That social insurance number for most of you probably was created when you started at the University of Waterloo in your with your postdoctoral program. That is, you're employed by the University of Waterloo, and you would have gone through a process of setting yourself up through human resources at the university, at which time a social insurance number would have been created for you. And so probably most of you have that in existence right now. There is something that's called My Account that exists with Canada Revenue Agency, and it's literally what the word says. It is a place where you go and conduct your ongoing affairs with regards to personal income tax in Canada. The one odd thing that exists with regards to this My Account is that you cannot create your My Account until such time as you have filed your first return. So some of you may have, in your efforts to get properly established in Canada, may have heard about this thing called My Account, may have attempted to set up your My Account and probably were declined. And you were declined because you hadn't filed an income tax return in Canada yet. So, number one, yes, you should set up a My Account, but you can't set it up until you go through the process of submitting and having your first tax return. It's called assessed by Canada Revenue Agency. Assessed means that they complete a review of it. So until you do get that tax return done, until you get your assessment back, you have to then, you have to have those things done before you can go through the process of setting up your My Account. And you'll notice that I've got the URL linked in this bullet where you go to do that. Even, I guess, to help in terms of dealing with the complexity of income taxes in Canada, there are a number of resources that are available for you to access to help. And so I've got in this bullet a sequence of some process you go through in terms of accessing those resources. So your URL to go to is this thing called canada.ca. And then you see that there is a series of 3 steps you go through in order to access, at the end, something I call Newcomers to Canada. And I'm going to refer to that in a couple of minutes, but I also want to mention to you that as you're navigating to Newcomers in Canada, there are a number of other bits and pieces of information that you will see. as you access each of those screens. And you may have an interest in terms of reviewing some of those at your leisure as you are educating yourself with regards to income taxes and how they work and the processes you need to go through with regards to filing an income tax return in this country. You're going to find, you're going to find that what I'm talking about today is just an elaboration of basically the document Newcomers to Canada. It's about I think a 20+ page document. It shouldn't take you longer than half an hour to read. And I'm just going to be elaborating on some of the things that are included in that document today. So obviously, one of the takeaways I hope you have from our session today is that the first thing you should be doing is informing yourself of this document if you haven't accessed it and informed yourself before. I'd also encourage you to view or download or print out this particular document. As I indicated, it's going to cover off a lot of the basics that you need to be aware of in support of completing your first tax return in Canada. So, do you need to file a tax return? And the answer is yes, you do, for the following reasons. Any income, employment income, and other types of income that you earn in Canada is subject to income tax. And so just the process of being employed for the university, as you are, requires you to file an income tax return. Now, in Canada, there are two levels of government that are allowed to collect and permitted by law to collect income taxes from individuals. The federal government, that's the government that basically is responsible for the entire country, and the provincial government of the province you reside in at December 31 in the year that you are completing a tax return for. So for all of you, that's going to be Ontario. Now, the process for submitting the two tax returns is handled through going through a single series of steps with completing a tax return. That is that you just have to complete a single return. That single return will include information that is reported to both levels of government. The information that is reported will come, or it will appear in your tax return in one of two ways. Some of the information will be applicable to both levels of government and therefore will be reflected in one, I'll call it one sheet. Other information will differ between the federal government and the provincial government, in which case there will be a federal version of a chunk of information, and there will be a provincial version of a chunk of information that will appear in two sheets. There may well be a situation in which you, all things being equal, will be eligible to receive a refund. And a refund means that you will be able to get something back. The something back that I'm referring to is as soon as you start your employment in Canada, as soon as you started working for the university, you notice that the university withholds certain amounts from your pay. And those amounts they remit to the government on your behalf through the year. And it may well be that the amounts that they have withheld were not reflective of your personal situation. So the government collects the only information the government, or the only information the university collected from you to help inform the deductions that they take off of your pay was a TD1 form that you would have filled out when you first started to work at the university. And that TD1 form does not cover every specific perspective that exists with regards to you as an individual. And so as a result, it may well be that you are entitled to a refund, or it may well be that you end up owing a sum of money once all the particulars about your situation are gathered and reflected in the income tax return you file. So that's just basically the way it exists. Another thing that applies to everybody is that there are certain programs that exist within the tax system that are called credits. A credit is an actual amount of money that will be paid out to you as an individual, a taxable or an individual Canadian citizen, or that's not necessarily Canadian, an individual who is liable to file a tax return. And in order to receive these credits, you need to go through the process of filling out and completing and submitting a tax return. And so the basic types of credits that are available are reflected in this bullet. The Canada Training Credit is a credit that's available that is tied to potentially some training that you've done while in Canada. You need to be at least 26 years old to qualify for this Canada Training Credit, and you need to have filed a tax return in a previous year, 2021. The HST or GST credit, that stands for Harmonized or Goods and Services Tax, is a credit that is paid out dependent on your taxable income. So as you are aware, every retailer in this country charges sales tax when you make a purchase. And so the government has said that they want to provide basically an amount of money to low-income reporters to offset the cost to them of the taxes that are paid on taxable items and services. The amount that you potentially qualify for is not dependent on the actual taxes, the actual sales taxes you have paid. It's dependent on your level of reported income. So you don't have to go through any process in terms of, keeping all the receipts for all the things that you bought and all the tax that you paid. You don't need to do that. When you file your tax return, the amount of taxable income that you report is what triggers the amount of this credit that you could receive. Ontario credits are a series of credits that the province of Ontario exists. They have their own sales tax credit, and they also have a credit related to rent that individuals pay. And again, you need to complete a tax return in order to apply for these Ontario credits. And finally, there's something called a climate action incentive. It's to help offset taxes that are collected now by governments with regards to dealing with issues surrounding climate. And so that climate action incentive, again, is calculated based on your level of income and where you live, and that is captured in your tax return. Now, you are also eligible to contribute to something called a registered retirement savings plan. And that is something that you can apply for at any time after you arrive in Canada and start working in Canada. And the Registered Retirement Savings Plan is a program that allows individuals to set aside and save a sum of money every year. The sum of money is impacted by something that is called earned income. It's 18% of an individual's earned income in the previous year. And when an individual sets up an RRSP, what happens is contributions made to that plan are deductible from your taxable income when completing your tax return. But again, it's predicated on your taxable income for the preceding year. So as a first-time filer in 2022, you couldn't set up and start contributing to an RRSP until 2023. There's another program that exists called the Canada Child Benefit Program. And that is a program to help offset the costs of supporting someone that you are responsible for. And if it's a child, that child there's a credit provided to support that child until they turn the age of 18. And you need to make application for the Canada Child Benefit, and you can do that as part of the tax return. There are some requirements in there that I'll come back and talk about the Canada Child Benefit in a couple of minutes with regards to what has to happen in order for you to apply. Okay, what types of income are taxable in Canada? Well, employment income, which is what all of you have. The T4s, T4 is simply the form number that you have from the University of Waterloo that indicates how much they paid you in the year 2022. Employment income needs to be reported and is taxable. I'll come back and make reference to how you report that on your tax return in a couple of minutes. If some of you came to Canada with some funds and you've taken those funds and you have put them into let's say a bank, you've put them into a savings account, or you bought some other types of vehicles that allow you to basically earn a return, typically interest on money that you have put into your bank, into a savings account, or into some sort of a savings vehicle. The interest, not the amount that you put in, but the interest you earn is subject to tax. And that investment income is reflected in another type of slip that you will have received from your financial institution called a T5. And that slip, the bank is obligated to issue if the amount of interest income you received in the year, i.e. 2022, is over $50. Another type of income that you may be subject, that maybe applies to you, is if you received any research grants. Those research grants would have been paid to you by, let's say, a department that you are working in. They would have been simply an amount that would have been agreed to in terms of, $10,000 or $15,000 or $20,000 for some research work. There isn't any income tax withheld from that grant. You get the dollar amount of the grant. You need to report that grant as income on your tax return, but you can claim any expenses associated with the costs you incurred in terms of fulfilling the obligations under the grant as expenses when you file your tax return. And that would include not only things like lab equipment and other things that you've bought. It also would include a conference that you've gone to, because you, based on the research work you're doing associated with the grant, you've made a proposal, you've been approved, you go to a conference and you're making a presentation. The costs of attending that conference are claimable as a research expense. If any of you end up doing some part-time work, and that part-time work involves you in the hospitality industry, sometimes as you are, well, not sometimes, most times, part of the income that you earn in the hospitality income is reflected in tips that you earn. There's no tax withheld, but they are taxable. So you need to report any tips or any, what I've called here, occasional earnings. Let's say you end up doing I don't know, something for somebody that you know, a small amount of work for them, they're going to pay you a sum of money and they don't withhold any tax, you should be reporting those occasional earnings also as income on your tax return. One more thing that I want to mention here before I leave this category is you will see in the Newcomers to Canada document, they made reference to something called a property you own before you arrived in Canada. And the implication or that particular type of scenario, it relates to things that you own for the purposes of earning a return. So you decide that you are going to, let's say that before you came to Canada, you invested in some property that, let's say it's a house. It's not a house where you're living, you're renting that house out and you're being paid rent. So what the government is wanting to do, or what the government feels they're entitled to do, is basically to collect some tax off of any investments that you've made with a view of generating a return on that investment. So the other thing that I wanted to say to you, well, the one thing I wanted to explicitly say to you here is, even though it appears when you read the document, they're asking you to report report the fair market value of even personal property like jewelry or art, I would suggest you don't have to do that. The only concern you have to have with regards to being informed about this is with regards to things that you own, that you are owning solely for the purposes of making money. If it's for personal consumption, no need to go through any process in terms of identifying that when you file a tax return. So we've got all those things that you need to include. What are some things that you can claim to help reduce what you've included in arriving at your taxable income? Well, three things that all of you will have that you can claim that are reflected in the deductions that the university has made are these universal programs. Other than the income tax they have withheld from you, there are two other programs that exist in Canada that apply to everybody who is employed. Everybody contributes to something called the Canada Pension Plan, and everybody contributes to something called employee insurance. Those are factored in and calculated as soon as you start working. They are subtracted from your pay. And when it comes to filing your tax return, whatever the total amount is that you have contributed to those plans, including the income tax that's been withheld from your income, can be claimed as a deduction when you file your tax return. And those amounts would be reflected on your T4 slip. Some of you probably might be interested or might be thinking about, well, can I claim the moving expenses that I paid to relocate to Canada, to move into this postdoc position? And the answer is no, you cannot. They are not claimable, unfortunately. So you just have to ignore them, and you can't do anything about them except have paid them, which you obviously have. If you have children that you are responsible for and you are paying daycare for those children, those childcare expenses you can claim as a deduction when you file your tax return. Now, there are some things called non-refundable tax credits. And there's just a couple of comments I want to make about those. First of all, I'll say literally what these types of tax credits are. They are different from the credits I talked about earlier. These are not sums of money that you will receive from the government, they are amounts that you can claim to help reduce your taxable income. Most of these tax credits, they're non-refundable. That is, you don't get the money back. Most of them also relate to your situation, your tax situation in any given year. And that is that if you cannot use them in a year, you can't carry them forward to future years, you simply lose them. So what are the basic types of non-refundable tax credits? Well, in Canada, the first, in terms of the federal tax calculations, the first $14,398 you earn in Canada is not subject to income tax. Living in the province of Ontario, here we see a difference between what the federal government does and the provincial government allows, is the threshold before income tax is payable is $11,411. Those amounts are prorated if you lived in Canada for a portion of 2022. Income tax, CPP, and UI withheld and reported. They are non-refundable. You may end up, the actual amount that's appropriate for the level of income that you have earned, you will not get back. My reference earlier to you potentially getting a refund would be if the university withheld too much for the level of income that you're being taxed on, you will get the too much back, but not the actual amount that you should be paying based on whatever the reported income is. There's also another type of credit, a non-refundable credit called a Canada Employment Amount, $1,287. That amount is basically available to offset costs you would incur to help support you in terms of your employment. For instance, going out and buying some clothes that you think you need to have to go to work. So that is another non-refundable tax credit that's factored into your income tax calculation. Donations and gifts. So if you make donations to an organization that's called a registered charity, you would have received a receipt regarding that donation. That donation you can claim, but again, it's non-refundable. If you can't use it, you lose it. Same thing applies to medical expenses. Any medical expenses you refer, typically prescriptions or amounts you pay for a doctor or a dentist, those medical expenses you can claim as a deduction on your tax return. Medical expenses also include any premiums that you happen to pay if you happen to be part of a health plan. Maybe you've set up a health plan on your own and you are contributing, you're paying, there's monthly amounts that you're paying. Those you can claim as a tax credit. Now, a slide here on the Canada Child Tax Benefit. And I just wanted to make a couple of points with regards to that. I mentioned before, children under 18, it's available. Both you and your partner have to file income tax returns. If both you and your partner are responsible for supporting that child or those children, and you need to both file returns even though one or more of you may not have any taxable income. The monthly credit that you are entitled to, and this is a credit that you receive, you just put it in your pocket and you use it to pay for the costs of supporting, raising, caring for the children under your care. That credit is dependent on family income. So again, the idea is it works on the same premise as income taxes. That is, those with a lower level of income should be eligible for the maximum child tax benefit. And as your income ramps up, the amount of credit that you will receive or the amount of the credit that you will get will be reduced. The idea being that those that make more money have less of a need to have additional support in terms of caring for their children. And here's an URL with regards to where you go to find the forms, and also a 1-800 number you can call if you've got specific questions regarding your claiming or applying for this credit. Now, when it comes to filing a tax return, you've got a couple of options in terms of the preparation of the return. You can fill out a paper return, and in order to fill out a paper return, you access the forms you need from the Canada Revenue Agency site. I'm going to talk about something I'm strongly encouraging you to do relative to the completion of your returns in a minute, which involves the use of some tax preparation software. But before I get to it, I wanted to mention a couple of things. One is any T-slip, any slip that you receive from the University of Waterloo and from a financial institution, which is probably the only T-slips you have, you need to include one of those slips with your tax return. That is, if you are mailing your tax return into the government. And we'll talk about the mailing versus filing electronically in a couple of minutes. That's why, if you look at your information slips, you will see that you have at least 2 copies of every information slip that you received. One to send in with your return, one for you to keep. I strongly encourage you, even if you are not able to file a tax return electronically, to avail yourself of tax preparation software. Because Canada is very complex in terms of the tax regime, tax preparation software is very helpful in order for you to complete your tax return. There's lots of different tax preparation software products out there. The one thing that you need to ensure is that if you're looking at a particular software, it needs to be certified by the Government of Canada. And you will find the list of approved software within the Canada site. There's 2 programs that I will recommend to you at this point. One is called TurboTax. It's the one I've used personally for many years. And the other one is called UFile. Both of them and a number of other software programs work and provide you, or they work well, and they provide you with 2 versions. Either you can make use of a downloadable software program that you will load onto your computer, and then you will access it through your computer to complete your return. Or there's a web-based version, which you simply log into your account, and then you go and complete your return electronically within your account. Now, basically all these tax preparation software programs work on the premise that you go through a couple of steps. First of all, you create your account, just like you create your account with regards to the use of any other software. Login and password protected. Then once you've created your account, you will then go through the process of creating your profile in support of completing your tax return. And that profile is managed by the software, and it takes you through a number of questions it's going to ask you with regards to the types of income that you have to report and the types of deductions you are eligible to claim. And basically, once you go through and respond to all those prompts in terms of yes, no, then it knows the types of information or the types of the components of your tax return it needs to fill out. And it will do that through just how the program is set up. So basically, once you have created your profile, you then will be prompted through a series of screens to go and enter, first of all your income, and then second of all your deductions. And then the program will generate your return for you. The completion is very straightforward. You'll notice that on any T-slip, any box with any dollar amount in it has a number beside it. That number is the same number that's referred to in the tax preparation software with regards to that particular T-slip. So, as I said, even though you may not be able to file a tax return electronically, please, I strongly encourage you, use tax preparation software if you choose to complete your own tax return. You then could print out your tax return and you can mail it. There's a feature when you're involved in using tax preparation software called Autofill My Return. And basically how this feature works is that when anybody who generates a T-slip is preparing and generating that T-slip, they need to file a copy of all the T-slips they have generated for individuals with the Canada Revenue Agency. Canada Revenue Agency then in turn inputs that into their system. And so they have a record of every T-slip that's been issued to within Canada in a given year. And basically they use that to compare to the T-slips that you are including in your income when they're assessing your return to make sure that you are reporting all of the T income and T-slip deductions that you should be and are eligible for. And they can also be used to populate your tax return. This is a lovely feature, but unfortunately you cannot use it until you've created your My Account. So again, that won't apply until you complete your second return in Canada for the year 2023. Now, I guess the norm, excluding the first year you file your tax return, is that you can submit your return electronically. And the electronic submission of a tax return is managed through the tax preparation software. The program that is used by the federal government or the CRA to submit tax returns electronically is called NetFile. And as I said, if you are eligible to file using NetFile, you can submit your return as within the software program that you are using. It's the last thing that you are prompted to do. And it basically takes about 2 or 3 minutes to submit a return electronically. If you submit a return electronically, there's no requirement to submit any of the T-slips. You simply keep them in the event that something crops up that the government wants to follow up with you about in terms of your tax return. So it's handled electronically. You then will receive notification that it's been submitted electronically, and then it is processed and assessed. Now, you cannot make use of NetFile until you have completed the filing of your first tax return in Canada. So that means that for the completion of your 2022 return, again, given that that's your first return in Canada, you're going to have to send it in by mail. And on page 32 of the Newcomers to Canada document, there's an address that you mail your return to. Once you have filed your first return, then going forward in future years, you can file electronically. The only time that you can't file electronically in future years is if you are submitting an amended return. The time taken to process your return will vary depending whether it's a paper-based return or an electronic return. An electronic return is assessed in 10 days or less. A paper return takes up to 2 months in order for it to be assessed. Regardless of whether your assessment or whether your return is submitted electronically or paper-based, a notice of assessment will be generated, and you will receive that in the mail. With a paper-based return, you will be able to access it through My Account when you've got My Account set up and you're submitting your returns electronically. That notice of assessment basically is just a reflection of the government having processed your return. They will indicate whether they agree with some of the principal amounts, the key amounts that are reflected in your return, or whether they've got any questions. And again, as I mentioned earlier, the questions they will ask will be based on what they have in their files, based on what all of the T-slip generators had to submit to them. And you'll need that notice of assessment in order to set up your My account. You should keep, I mentioned the issue, of mail. You should and are required to keep tax returns for 6 years. So the government has the ability to go back for a maximum of 6 years to question you in terms of amounts that have been included in those returns. So a lot of information. As I suggested, or in my discussions with Sarah, you're probably going to need some time to digest all of this, to maybe spend some more time now, hopefully being a little more comfortable in terms of how taxes in Canada work, to start looking at the specifics with regards to you filing a tax return. Your tax return is due in the hands of the government, the Canada Revenue Agency, by April 30th. That deadline date is extended to the Monday after April 30th if it falls in a weekend, which is the case this year. And I think that's all I'm going. Oh, and then, yes. So the thought process and typically how it works is that once you have digested all of this information, once you have, spent some time and effort working through your personal tax return, you then have some very specific questions that you would like to get a response to. That's when you book a 15-minute appointment and we sit down and we talk about, and hopefully are able to answer your personal, very personal, specific questions with regards to your tax return. And my last comment is, if you want to throw up your hands at this point and say, there is no way that I'm going to attempt to complete my own tax return, is there another option? Yes, there is. That option is you can go to some services that are offered by organizations. H&R Block is one where they will prepare your return for you based on the information that you provide them, and they will charge you. And I'm not sure what they charge, but I'm going to say it's probably upwards of $150 to do a fairly simple, straightforward tax return for any individual. So that's it. I will throw it back to Sarah.
All right, thank you so much, Bob. So much information there. So I hope that was helpful for everyone. In the chat, I put a link to the page that will put the recording on. So if there is something that you want to go back and look at again, the recording will be posted there within 2 business days. I've also put the link in the chat for you to book one of those one-on-one consults with Bob. But now we'll open up if there's something that you want clarified. We still do have about 10 minutes left for questions. I will just specify that the one-on-one consults are there for those more kind of personal, individual, detailed items. And if you have, so those questions, but if you have questions around clarification, general questions, definitely time to ask that now. Just gonna quickly, Bob, I'm just gonna see if I can turn off your screen share here. There we go, that is off. And I'm also just gonna pause the recording now.